Good evening, everyone, and welcome to The Money Show with me, Avan Dabash. This is the only show of its kind that gets you top personal finance experts to answer all your questions and queries. The show is dedicated to you, the viewers, so do remember over the next half hour or so, you can connect with us by dialing into the number that's flashing on your screens or simply email us your portfolio or your mutual fund related questions on The Money Show at etnow.tv. Joining in today, we have PV Subramaniam. He's CEO at subramani.com and he's with us in our studios. Well, great to have you on board. Lots to chat about. So let's start off with our first question for the day as we get those callers online. Well, Monila Mishra is connected with us saying, I'm looking at some less volatile but good tax saving schemes. I want to invest close to 20,000 rupees a year with the next 3 to 5 years locking period. I have come across some of the following mutual funds which I think give good returns. Can you please advise me? Should I consider these for my investments? So she's shortlisted some mutual funds. Let's have a look. Axis Long-Term Equity Fund, Aditya Birla Sun Life Tax Relief 96, Invesco India Tax Plan, L&T Tax Advantage Fund, HDFC Long-Term Advantage Fund, and SBI Tax Advantage Fund. So she's fairly clear. It's a sum of 20,000 rupees a year. A, is that amount enough? Is a time horizon of the next 3 to 5 years adequate? Do you think that, it's possible to invest in something that's less volatile but still gives you a good return? And how are you looking at her list that she's, shortened in?
No, let's start by saying equity funds are for the long run, and when you say long run, you mean something like 10 years.
Yeah.
If it does well in 3 years, great, but if it doesn't do well, what is she going to do? She has to stick around. So she should have a 10-year view. You ask me, is this fund enough? I think this is too much, because in the 80C benefit which she is investing for, ELSS, she should not be investing more than 12,500, because only 1.5 lakhs is what you get 80C benefit. So beyond that, it doesn't make sense to be in an ELSS fund. So which funds? The Aditya Birla fund looks good, the State Bank of India fund looks good. So even if you were to put 7,500 in one fund and 5,000 in the other fund, that's good enough. 12,500 is what she should be putting. The third fund she could pick up is something like a Mirai Emerging Blue Chip Fund, because that money need not be in a lock-in. In case she has an emergency, she can remove that money or something like that. So the ABSL fund, the SBI tax fund, 5,000, 7,500 even interchangeably is good, and they should take care of her 20,000, but she should think of a 10-year time frame. In 5 years, if the fund does well and she wants to remove, that's fine, but anyway she understands as a 3-year lock-in. But yeah, 20,000 is too much, so 7,500 goes out and only 12,500 goes into ELSS funds.
Okay, that's the take coming in on what kind of returns you are looking at, which kind of funds you should invest in, and of course that total sum. But I think first things first, increasing the time horizon would be priority. Yeah. Do remember, you can connect with us as well. There's a phone number that's flashing at the bottom of your screen. PV Subramaniam is with us to help you out with your mutual fund related questions. Well, we have a query from Jayesh. He says, I'm 41 years old and I'm new to mutual funds. I have certain goals, and can you please guide me as to how I can save up to achieve my goals? Now, he's very specific in terms of the sum that he wants to save for that goal. 26 lakh rupees for children's education, 10 lakhs going towards reconstruction of his house, his children's marriage close to 45 lakhs, and retirement in the next 20 years about 30,000 rupees per month as a regular income. He already has investments, so he's got a PPF, 6 lakh rupees, EPF 19 lakhs, he's accumulated 2 lakhs in NPS, he has a Sukanya Samriddhi 2.8 lakhs and life insurance of 7.2 lakh rupees. So not put his money in mutual funds so far. He's fairly categorical about some of his goals and he wants to save up for retirement. So I think the first step is that at least he's identified his goals. So that would be one step in the right direction. Yeah. Now let's advise him. He's made certain investments, PPF, EPF. Is it enough? And what mutual funds can he look at?
Yeah, first of all, I like the fact that he has saved. He has not invested so far, he has saved money. So saving is actually more difficult. Investing is easy. Once you have the money, you can invest. So he has done the hard part, or he has done the saving, and he has only saved his money, which means he has put in some 7%, 8% kind of returns. This is not going to create a bigger corpus. But right now, this amount is enough if these are the numbers which he wants. let him start investing in mutual funds. Let him stop putting money into these funds, because this will anyway accumulate to something like a crore, because it's already 30 lakhs. Over the next 20 years, it will become something like 1 crore 20. Okay, that's a nice sum of amount of money for him to have. So let him start putting money into a Mirai emerging blue chip fund, in an ABSL. ATC ELSS fund or an Axis long term fund. Let him put money 30,000 into these funds, and let him have a review after 5-6 years as to what he has done. Even if he stops saving, in the sense that whatever he saves further, if he starts investing, then he can put into a retirement plan, because he wants a retirement plan after 20 years. So these 3 funds should take care of his immediate requirements for investing. Let him keep the money in the debt funds which is there, in the debt instruments which is there, but going forward, let him do SIPs into these 3 funds.
There you have it. You've done a lot of the hard work, and I think Mr. Subramaniam's made it easier for you by spelling out exactly which funds you can look to invest in. Mirai Blue Chip, Reliance Retirement Plan, ABSL tax.
Yeah, one more thing to add is he's got inadequate insurance. He's got only 7 lakhs of insurance.
That was your first point.
Yeah, so I think he should take a 1 crore term insurance, maybe for 15 years, because he should retire by 55-60. So at least for 15 years, he should take a 1 crore term insurance.
There you have it. Health is wealth. Start saving now, and of course look to up that insurance, and of course you've got your mutual funds that have been advised to you by Mr. Subramaniam. And do remember, if you have any further questions or queries even regarding the advice, you can email us on the Money Show at etnow.tv. Let's connect with our live caller from New Delhi. Nanda Lal is with us on the phone line. Hello and welcome to the Money Show. What's your question? Hello, good evening.
Good evening.
हाँ जी, आपकी क्वेरी क्या है?
हाँ, मैडम, I have purchased SBI Blue Chip.
Okay.
SIP कर रहा हूँ मैं 5,000 रुपए महीने की for 3 years.
Okay.
It is good or not, sir? I want to.
अच्छा fund है. It's a good fund.
But how old are you? Any goals, sir?
After 10 years.
10 साल के लिए?
10 साल के लिए ले रहा हूँ, मेरे को 50 लाख रुपए चाहिए.
Can you elaborate a little bit more on the funds? I only caught the SBI
Blue Chip, yeah.
हाँ,
SBI Blue Chip में आप निवेश कर रहे हैं, अच्छी फंड है. There is no doubt, it is a good fund. It is a very focused fund. It is a process oriented fund. आप इसी में निवेश कीजिए. 7-8 साल के बाद देखिए क्या हाल है. अगर आपको 7-8 साल के बाद अच्छा लग रहा है तो थोड़ा थोड़ा निकालना स्टार्ट कीजिए. डोंट वेट टिल द लास्ट मिनट के 10 साल में मुझे पैसे चाहिए, मैं 10वें साल में निकालूंगा, ये मत कीजिए. 10 years is a good time frame, but after 7-8 years, have a look what it is doing and start withdrawing after 8 years. It's a good fund.
Okay, Mr. Lal, I hope we answered your question. Stay invested, and of course, you can email us, themoneyshow@etnow.tv. For now, let's take a quick break. Come right back. The fund review as well as more of your questions and queries with Mr. Subramaniam when we return. Great to have you back with us. This is The Money Show, a show dedicated to you, the viewer. If you have any personal finance, mutual fund related queries, you want to prune your portfolio, are you a first time investor, want to know which funds to invest in? Well, TV Subramaniam to the rescue. He's with us on the show. Well, before we get cracking with more questions, we have our fund review segment. Today we're discussing the Axis Long-Term Equity Fund. On a year-to-date basis, it's fallen about 0.6%, assets of about 16,400 crores, expense at about 2%. Let's understand, first up, your rating on the Axis Long-Term Equity Fund, and give us a sense as to whom you think it is appropriate for. Why should investors look at it if you think it merits an invest?
Yeah, it is easily the biggest ELSS fund, and the expense which you had put is little historic. Going forward with the reduction in TER, I am sure it will go below 1. So if it goes below 1, it may go as low as 0.70 or 0.75. So the fund expense ratio will come down. It is a large cap oriented fund, so I don't know whether in future whether it will be able to do as well. But yeah, it's a good fund manager. Long term track record is good, so happy to put money in that. If you have a gap in your section 80C, that is your ELSS requirement, Good fund. I definitely say call it a good fund. Yeah, large cap oriented. So therefore, maybe you will get something cheaper in index funds, etc. But yeah, not bad at all. I would put it at an 8 on 10, and it's a good fund, no doubt about it.
Okay, there you have it. That's the outlook coming in on the fund, an 8 on 10. Well, do remember our phone lines are still open. If you have questions, do reach out to us. Well, let's move on then to our investor education initiative, that is Jan Nivesh. Times Network and the Association of Mutual Funds in India have launched Jan Nivesh, where it's getting people to pledge to invest their one-day income into mutual funds for the benefits of long-term compounding. You too can be a partner of the growing Indian economy. Invest in mutual funds. Join the Jan Nivesh movement. All you have to do is give us a missed call on 1-800-833-666 to pledge to invest. We've already hit the 10 lakh mark, and you too can be a part of this movement and bear the fruits of it. So from our on-ground events, we have some questions and queries. So let's take them across to Mr. Subramaniam. Suresh has reached out to us. He says, I'm 31 years old. I have a high risk appetite. My investment objective is to amass a corpus of 4 crores for the next, for my retirement in the next 20 years. And an additional 2 crores for my home in the next 15 years. Kindly evaluate my investments. He's got the DSP BlackRock Opportunities Fund Growth, Sundaram Rural Growth Fund, MOSL Most Focused Fund, Mire Asset Emerging Blue Chip Fund Growth, L&T Emerging Business Fund, and SBI Small Cap Fund Growth Direct. So first up, let's talk about some of those goals. He says that he is a fairly, he has a high risk appetite. He's young, he's only 31 years old, and he's looking to invest for his retirement goals. What do you make of his portfolio, and do you think he's got the right stocks, mutual funds?
Yeah, he's got maybe a little too many, but okay. Definitely he's at least started the process and he's been investing. He has not given us what corpus he has already created, but all these funds look good. I would just get out of the Sundaram fund and increase the the amount of SIP in the Mirai fund, and he has said most focused. I'm assuming it is a multi-cap fund of Motilal Oswal. That's also a good fund. So yes, his targets are good. He started young, maybe. So at this age, if he's investing and he's investing aggressively in all these funds, he has not given us the SIP amount. The SIP amount which is said 1500, that is 1500 a week. That is also 6,000 rupees. So the others look like, you know. So all these funds, as long as he continues putting in money, I think he should reach his target of 4 crores and 2 crores. It should not be an issue. The question is, what rate will he expect, or should he expect? Expecting anything more than 12% looks very ambitious, so he should be expecting 10-11%. But yes, he will reach the target. Assuming another 30 years of investing, he should be able to reach both his targets of 4 crores and 2 crores.
Okay, there you have it. That's the outlook coming in on your entire portfolio and the mutual funds that you have. We're completely out of time. So, Mr. Subramaniam, thank you for joining in today on the show and helping our viewers out. Do remember, you can reach out to us by sending in your questions on The Money Show at etnow.tv. Thank you so much for watching.
Vico Term.
You are on top of the world with Times Network. And you're watching ET Now.